This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Monday, November 14th. Well, now there's been a lot going on in crypto. In just the last few days, Sam Bankman-Fried's global empire has come crumbling down around him. Multiple of his companies have filed for bankruptcy protection. Various wallets associated with his exchanges were drained of their funds. Sam himself was questioned by police and regulators in the Bahamas, where FTX was based. How did it all come to this? You'll hear more about what's going on and how we got here on some special episodes of the Bloomberg Crypto podcast this week. On Tuesday, my colleagues Vildana Harik and Katie Greifeld will discuss the very latest developments in the SBF, FTX, Alameda universe. But for today's episode, which we recorded before the shenanigans of the last several days, we're going to talk about Mango. No, not the fruit, the DeFi protocol, one that was hit by a $100 million exploit recently. Mango experienced a type of exploit that's really raising eyebrows in crypto these days. It's called a price manipulation attack, and it involves taking advantage of how DeFi platforms are supposed to work. In this episode, I'll be joined by Bloomberg reporter Muyao Shen.
Crypto is 24/7, it never sleeps.
And by Evgeny Gaevoy.
We had another experience with a hack back in the summer with Optimism.
The CEO and founder of Wintermute, a trading platform that was itself hacked for $160 million back in September. Muyao, what's been going on with DeFi and specifically with Mango that has folks a bit stressed right now?
I think it's really all started of this, us being at this stage of the market. A lot of tokens are not as liquid as used to be, as there's less retail interest in the space, and there's also less, assuming, institutional interest in the space. So as a result, a lot of tokens, as we know in the past, especially in the bull market, there's hundreds of tokens that's being created. Now, because there's less interest, there's less money in the space, a lot of tokens are not as liquid as used to be. Therefore, it's easier for people to sort of manipulate the prices of these tokens by singly just like a one trade or a few trades, so they can move the price either up dramatically or down dramatically easily.
This doesn't seem to be technically or practically illegal as far as any of the various lawyers that we've spoken to. Just kind of in principle, it's very upsetting, right? You are the owner of a platform, or you are people who are affected by this thing, and someone comes in and is able to take advantage of price movements that they may themselves be triggering to, buy or sell, or both buy and sell in a way that allows them to walk away with a significant amount of money. But Evgeny, as somebody who has been sort of on the other side of these kinds of exploits that exist in the legal gray area, what is it like to go through it?
Basically, I'm in crypto for over 5 years now, but before that I was in normal traditional finance. And I would say those kind of trading strategies, quote unquote, would be very much illegal in traditional markets. Like if somebody would execute something like this on, CME and NYSE, for example, they would get into a lot of trouble. So to me, it's a very, very much illegal what happened, to be honest.
People who are engaging in these kinds of exploits, and there is one in particular as it relates to Mango, who has sort of publicly been talking on Twitter, on Discord, saying, this isn't illegal. Your contracts allow me to do this kind of stuff. I'm going to do this kind of stuff. And to our knowledge, he has not been charged with any crimes. He's definitely not been arrested. But what has been happening is a sort of, how shall I say, rage from folks in the DeFi community that he does have this degree of impunity to sort of say, I'm going to do this thing and you can't do anything about it. And specifically, when he was first able to do this exploit with Mango and the initial amount that he was able to, manipulate in his favor was 100 million, eventually it was cut to about half. Muyao, what happened between that 100 million and that 50 million? Like, what were the conversations between Mango and this person that reduced the amount that was lost?
I mean, correct me if I'm wrong. What I was heard is that what happens is he posts a statement about what happened. And again, he says everything he did was totally legal, but he had a conversation with the Mango team. Eventually, they made a deal that he would return part of the money back to the Mango Markets team, just because what happened with Mango as a result is that the whole project became sort of insolvent and they had no money, low liquidity, and a lot of users are trapped with the fact that there's no money left there.
Now, Evgeny, I've got to ask you this question, right? Like, Wintermute was affected by an exploit in September to the tune of $160 million. What did you learn going through that, and what are you doing? How are you thinking about the space differently as a result?
Honestly, not much changed, I guess, in my thinking. Like, I see those hacks, exploits as basically cost of doing business in a way. But I wouldn't say it's inevitable, but it's something. Well, as an operator in the space, you basically have to accept that that's a possibility. For any trading strategist, you do that. Yes, there is a possibility of a hack, of exploit, of something going wrong with the protocol you own or protocol you trade on. So for us as a firm, nothing changed in terms of a strategy. Like, we obviously learned quite a bit on this event. Mm-hmm. We will approach trading going forward in a much safer way, but nothing changed in terms of our, in terms of us being really interested in the space, in terms of us being really invested in the space, and basically us continuously working to continue trading, continue moving the space forward.
Is there actually a way to design a seatbelt? Is there a way to get this beef from a cost of doing business to something that is unattractive to potential exploiters?
Look, it's always possible to make it super safe. And I guess that's what the whole ecosystem DeFi community is working towards. And ultimately, they will arrive. Like, if you look at battle-tested protocols like Aave, for example, it looks like it's pretty safe to use. And there are like billions of assets in protocols like this. But it does take time to arrive to the stage where like protocols like Aave or like Uniswap, for example, are battle-tested. And it's basically clear that there are no exploits possible, like, for those particular protocols. But the main challenge always arises when there is an interception between different protocols, which is the coolest thing about DeFi in general, when the protocols can coexist with each other and like build on top of each other. And like in case of Mango specifically, the oracles, and from what we saw from a lot of exploits in the space, not just Mango, but with other ones, oracles are typically the most vulnerable point, because like that's where the manipulation can potentially happen. And if you design your protocol as something that has to rely on Oracle, that's ultimately can be your point of failure.
Now, when we talk about oracles in DeFi, we don't just mean some like all-seeing entity. What we're describing are the pricing systems that folks use to say, oh yes, this token is actually trading at XYZ price. And it sounds like what you're describing is the fact that these automated systems that assume a price that exists is valid is a point of vulnerability, because that price might have been manipulated 5 seconds before.
Exactly. And basically in traditional finance, this price manipulation would be illegal, while in crypto, at the moment, it's not.
Muyao, you started by saying, one of the reasons this type of exploit has been possible is because of the relative lack of liquidity. In an environment with less liquidity, it's a lot easier to make these sorts of dramatic price moves that allow the sorts of trading strategies that folks are using to make these kinds of profits. There have been a couple of platforms and protocols I'm thinking about, like Compound and a couple of others, that said, okay, for like less liquid tokens, we're going to take certain types of steps to make them less prone to this kind of manipulation. What other things have you seen, or are you talking to people about, that they're also considering as a way to mitigate the risks here?
a big part of what happened with the Mango markets and the similar attacks was what kind of collaterals you can use to borrow money in the space. I think when projects in general consider what are the tokens that we accept as collateral is very important. I think sort of due diligence around each token and about technical details and everything else around the token and the project is very important. Like as crypto is 24/7, it never sleeps. It's also very important to having established or integrate sort of on-chain analysis and monitor around your project just to make sure that, if something bad happens, you can detect it early on and being able, at least having time to fix it or to save it.
Evgeny, as somebody who is in the position of having to convince borrowers, lenders that they should continue to be using, not just like your protocol, your platform, but like DeFi in general, what are you saying to folks out there who are looking at this and they're like, is my money at risk if I am, investing or in any way involved in DeFi right now?
I think one thing to consider is just how transparent it is. And I think I'm coming from very, very basic example is lending protocols. We've seen this year that Celsius collapsed, companies like BlockFi and Voyager had issues. And one unifying theme around all of those is you could put your money in Celsius, but you would have no idea where the yield is coming from. Mm-hmm. In DeFi, it's very much transparent and clear where the yield is coming from. Whether you put it on Aave or you put it on Maple, for example, you know exactly where the yield is coming from. And that's a very big shift from very intransparent, traditional centralized kind of place.
Coming up, more from Bloomberg reporter Muyao Shen and from Wintermute CEO Evgeny Gaevoy on how the recent attack on Mango is shaking up the crypto industry. Now, in the immediate aftermath of the hack that affected Wintermute, you tweeted that you were willing to offer a 10% bounty to the hacker if they returned the funds. How have your feelings on bounties evolved over time? Do you think that these are effective? Do you think that something like a cap makes sense?
I think it's ultimately up to every protocol what to do with it, or every company what to do with it. To me, something between 5 to 10% generally makes sense. Mm-hmm. Putting a cap on it might make sense as well. We had another experience with a hack back in the summer with Optimism, where it ended up successfully, where the hacker did accept 10% bounty. I personally think 10% sounds fine. Limiting it to $5 million can also work, I guess. Yes. But in general, I think it's a great thing if we have some kind of standard set in place so that every protocol or every company doesn't have to keep reinventing it every time something like this happens.
The thing is, though, every time you, at least when I talk to somebody in DeFi and I start saying words like agreed standards, they're like, no, that is the opposite of decentralization. How do you square those things?
Yeah, I think there was actually a recently debate between SBF and Eric Verhes. And Eric in his post, he basically there is a difference between regulation and standards. Mm-hmm. And regulation is laws imposed on you, and standards is something, you can agree to follow, basically. And if you follow the standards, people will deal with you more likely, but you don't have to. You can say, I'm not going to abide by those standards, I'm going to do my own thing, and that's fine.
Muyao, you talk to a lot of folks in DeFi kind of all day long. We've said on this podcast over and over that it's almost like a meme at this point. If you are the CEO of a big crypto exchange, you're like, we just want regulatory clarity. We just want to know what's going to happen. What is the vibe among the other DeFi executives that you speak to as it relates to this regulation and enforcement piece?
I think it's funny. I think when I first started covering crypto way back then, saying way back then is a little bit exaggerated because DeFi has been existing only for this these few years in the past. In the beginning, when we talk to DeFi folks, and it's usually just those degens, anomalous people on Discord and trying to find the alpha. But now, I think people are becoming more realistic. I think a lot of folks, when I talk to them, they understand, for DeFi to really grow, to really go bigger, you need bigger money coming into the space. You need people to use it for real life application, and people can borrow and lending even real world assets in the space. Then you have to have regulations on that. I think that's the sort of a general consensus as I'm getting from people these days. But I think, as we just discussed, it's really hard to tell how we can get everyone together to have some sort of agreement on how to regulate it and how can sort of enforce people to follow the rules.
Evgeny, from your perspective, what is kind of your ideal version of something like that for DeFi? If we ever get to this sort of scale for DeFi where the applications are things like, widespread availability of mortgages or, whatever sorts of consumer finance people might need, what does that look like for you?
To me, the ideal regulation around DeFi, and maybe regulation is not even the right word here, but to me, the ideal would be, for example, with SEC not saying this security is not security, which they're not even saying, to be honest, but it would be saying, okay, guys, we looked into Ethereum. It can be risky, but it's definitely not a scam, something like this. Mm-hmm. So basically, instead of prosecuting protocols for potentially being securities or not, basically making a list of safe things to invest in. That to me would be ideal, because the world where what especially American investors are running into now, or ordinary people really, is, they cannot legally use a big portion of DeFi protocols like DYDX, for example, mm-hmm. because DYDX just IP blocks US people because it doesn't want to deal with CFTC or SEC because it doesn't want to break the law, which is very understandable. But it also means that basically a big chunk of the market, big chunk of the opportunity which is open for the rest of the world is just really closed for normal retail people in the US.
Well, a pleasure to have you both on the show. Thank you again for taking the time.
Thank you.
Thank you.
You can find more of Muyao Shen's reporting on the Bloomberg terminal, on Bloomberg.com, and on Twitter. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.